Welcome to a weekly update for members. It's November the 20th after the market closed on Friday the 18th. Please do check the other video which is separate to this, which is the market overview as well. It's a short week this week, Thanksgiving in the USA, no trading on Thursday and very light trading on Friday. So let's look at some things moving forward. The overall short position, well, as I discussed in the market overview, it's getting increasingly harder to not deny this uptrend. So I've already put 30% of my position on the bear side down, which is a January 2018 expiration, so nothing to worry about with timing wise on the SPXS. But obviously the market is bouncing back, and this so-called Trump rally has caught a lot of people by surprise, especially because the global picture hasn't changed at all. In fact, this Trump rally has made things very much more fragile because the dollar is getting stronger, and that's going to upset a lot of things, including emerging market debt. The world economy is too fragile a place to have this kind of shock, and we haven't yet seen the impact of that. Which is why the FXY, one of the positions I opened last time, has done so well. So we had warnings there. The charts were telling us the things we were looking at automatically were telling us that something was going on. So what I've done then because this could be turning into another new bull market run. Stranger things have happened, but as I mentioned in the market overview, it's doing so on very thin ice. And for example, in 2007, the global economy was in full-blown technical recession, but the markets kept going up higher regardless. So the market can do anything. The market always does what it's supposed to in the end, but never when it's supposed to is a common saying. And the market may well shoot higher for a little while before this reality check kicks in. And as I look at this chart now of the New York Composite, it's certainly looking more and more bullish. With the indicators I look at to say bull or bear, you have to look at this now with cold views and say, okay, bull, I'll give it to you. However unsettling they must feel. If the facts change, I have to change as a trader, and not to do so is just plain silly. So having said that, I've got 30% open on a short position, which is why I only took 30% out, and that probably in itself was a little bit naughty because, as I said at the time, this is finger in the air job. It's not scientific, but I wanted some insurance because this thing could turn around very fast and very violently indeed. So I do want to cover that position though. So what I've done is, and this is a trick I mentioned back in the seminar, is that 90-10 trick, where I think the market's going to go down, but in the short term, we might have a raise higher. So for every $100 of options, remember I'm doing this with options, which is another reason why, because I wasn't sure about the at what point the market was going to go down. I've been saying that's why I've been using options. So using options, then it's a SPXS with a strike price around whatever it is currently. January 18 expiration date. I leave my short position open, but for every $100 of short position I buy with options, I'm going to also buy $10 worth of long, the exact opposite. So that's not if I have $100 on a January 18 market going down with SPXS, I would also buy $10 of the market going up with January 2018, and that one is UPRO. UPRO. So I've got for every $100 of SPXS option with expiration date January 18, I've got $10 worth of UPRO January 18 expiration. I remember that's only 30% of the position I intended to put down anyway, so I'm kind of covered. I think that's pretty cool. If the market goes down as it should do, not to say it will do, but as it should do, then that's great, and I lose that 10%, which is fine because the gains will more than outweigh that. That's really just a little bit of insurance there, that 10%. If the market goes up, on the other hand, and soars higher, that 10% will cover the money that I had should in theory just about cover the money I had down, so I break even. So the name of the game there is to create a scenario where worst case is break even. So that's where I'm at right now regarding the short position. This is not an easy market to nail down for sure. But I do think, though, that the Fed manipulation of 2016 has put it in a place where it probably shouldn't be. So we have seen a lot of distortions there as Democrat Janet Yellen attempted to help her buddy Obama out, which didn't work out too well. So anyway, that's that. Make Mum a Millionaire, again, for reasons I've already discussed. Too much conflict going on right now to be able to say, oh, that one's a absolute home run, no doubt about it, which is the kind of trades we're looking at there. Frustrating, but impatience is a sure way to lose that challenge. Let's look at a cut of trades that I mentioned last week and see how they're coming along. Let's look at CS, Credit Suisse. It looks like it marched up from where I was entered here, marched up and then came back down. I'm happy with this one as long as it's kind of gonna, I'd like it to stay above 14. Let's look at the weekly chart is what's attractive about this stock. Obviously finance stocks is where it's at right now, and this stock has just started to turn around. As you can see, the 40 weeks turning up, it's getting above its 40 week, and it's just broken a nice sort of period of resistance here. So I'd like to try and stay in this one above its 40 week, below the 40 week on the weekly chart, and I'll bail on that one. So it's pretty tight stop loss. But if it gets you can see this is a stock that's just starting to just bounce around, forming a base. So if it gets below 14, I'll get more concerned, but it's fine where it's at right now. That's one I just want to hang on to above the 200-day here and try and ride this comeback story up high. As you can see, it's got a lot of potential upside there. FXY was another one which I said I was shorting below the 200-day, and that's where it was last time, and it went heavily down as a result, and that's the stop loss there. That was tidy. I was tight below its 200-day there, so that's a good entry point. And it was downhill all the way from that one. The dollar just keeps on rising, which means the yen is going to go down. Everything is priced against the dollar. So I'm going to put a gain lock in now to protect profits in there at around 90. So I'm going to put something in here. If it gets above 88, I'm probably going to take a quick profit on that one. But we can see we've got a kind of SV60 bear case going on here right now, so it's in a pretty good place to keep going down further. And Facebook actually has turned into what might be an interesting short actually, but it was a buy if it stayed above there, as I said last time, but it went straight below, so that was a quick stop out for that one, although I didn't really get a chance to enter it because, as you can see here, when I was talking last week, it was there, which is a nice entry point. But literally as soon as the market opened, it was kind of below, so I didn't actually get into that trade. But, tight stop loss on that one. Not going to bother with Facebook anymore, but its future does look a bit dodgy. Let's look at a few new ones here now. What I'm looking at now is stocks that if there's a little bit of a pullback, because stocks have had such a good rally from here, I'm not going to chase ones that have run away with it. But because there is a little bit of a doubt setting in, what I'm going to look at now is some stocks that if there's a little bit of a pullback, I can see a good entry point and try and catch a ride on stocks that look set to, looks like they're making a bit of a comeback. Let's look at CF. We'll look at the weekly charts in this case because I need to see I'm looking at the bigger picture here of, as you can see, this stock that respects its 40 weeks, come a long way down, but then it's just starting to turn around again. So this one here, I like CF. If I zoom into the daily chart here, I think this is great. See, it's just popped its head above the 200-day, a nice little pullback, and off it goes again. I'm going to buy it here between 27 and 28. So it's proven itself to, stay above it with a tight stop there at around 26 and a half, something like that, on the respecting its 200-day. Let's also look at GTLS. That's another nice one there. You can see another, for the same reason, rising 40-week. I'd like to get in this one if it would let me at around 28. You can see that step there, something in that region, and if I can get in around there, then I'll get it, set a stop loss at below the 40-week. ALB. This one is a different sort of story. What I'd like to do here, as you can see, is steeply rising 40-week. I'm going to try and get in there at around 76 with a stop loss below the rising 40-week right there. And also ZUMZ. Similar story. This one's starting to make a run for it, stepping out of there. The daily chart is better for this. This is a nice stepping stock after it's just broken out on high volume there, looks like it. So I think if I can get in there at around between like 23, 24 and catch a ride on that one, as long as that one respects its that step there at around 22, then that should be good. CHK, this is another one for the weekly chart. Nice, another comeback story, it's respecting its 40-week nicely, hits it, bounces off again. Somewhere between, looks like about $5 and $5.50, something in that zone there. Again, I'm just trying to get as tight as possible to this rising 40-week, and you can see there's a huge upside to that one. EMES, similar idea to the last one. I'd like to get in here at around between 9 and 10, something like that. Just want to get as tight as possible to this now rising 40-week with a massive upside there. GOL. So you can see there's a pattern here to the sort of things I'm looking at. I think the chart is saying more bullish things, but I don't like the way that the global economy backdrop. I think it's on thin ice. So I'm looking at very tight, tight risk, low risk, tight entries for individual stocks that do look like they've already taken a pounding and they're making a comeback. So seeing which ones are going to head north, and huge upside to ones like this, as you can see. I'd like to enter this one around say 15, 16 area for the similar sort of reasons. And if it all goes wrong, then I get out with a tight stop loss. But if this rally is going to go on, then these are the sort of stocks I'll ride it with. AMBA is a stock I've traded successfully before. A similar idea, as you can see. I'd like to get on this one around 55, around a 55 area, something like 55, 56, and catch a ride on that one. So you can see some of these, they've just are looking for a little bit of a pullback to get in a safe area. Otherwise, fine. I just won't bother. TSU, the last one. Exactly the same idea. We've got a step going on here. Looks like around 11, 12, something like that. It's a nice entry point for there. So that's all for this week. I will speak to you next time.